What's up, everybody? And in this video, what we're going to be talking about is Lowe's Corporation, ticker LOW. This stock just got some massive upgrades. The upside potential that they have is incredible. Their earnings were insane. They're undervalued compared to the market as a whole, and specifically, and more importantly, to their industry. We're going to go over how this company is pursuing to do incredible things and why I believe that this stock is a buy. Now remember, everything I say on this channel is not financial advice. It is just for entertainment purposes only. But before I go any further within this video, I'll ask that if you do enjoy it, you make sure to subscribe and you turn on post notifications for videos coming out every other day. I know that yesterday there was no video that came out and what was supposed to be the daily timeline for every other day, but I had a lot of stuff going on. I'm currently in the process of moving, different things like that. So, but not going to waste your time talking about that. Let's get into this video and talk about Lowe's stock. So what we'll see right here is that this is my portfolio. M1 Finance is glitching a little bit, so it won't show me like my quarterly, my annual, my 3-year returns. But what we can see is since November 15th, I'm up 0.63%. There's 24 holdings in here. If you want to go get access to this portfolio, check out the link in the description below. It'll just say Dividend Portfolio. You click that link, it'll take you to M1 Finance. And check out M1 Finance using the link in the description below also for a free $50 once you deposit $100 into your account. But let's get into why I like Lowe's stock. This dividend stock has huge upside potential. What we can see right now is that this past year, they are up 63.93%. They currently trade at $251 per share, pretty much $252. And over the past month, they're up 10%. You can just see we were stabilizing around 230 per share, 235, actually having some bearish downtrending momentum. Then we made some bullish sentiment, came up to 235, earnings 244, went all the way up to 255 per share. Okay, incredible stuff happened for the stock. They have a dividend yield, a forward dividend yield of 1.27%, and a price to earnings ratio of the trailing 12 months of 21.97. Okay. One thing that I really like about this company that does not concern me about can they sustain their dividend is their payout ratio is very, very low. Their earnings per share is currently $11.96 per share, and they only pay out $3.20. So there's huge room for growth. And I mean, I'm a younger investor, and so I believe that my portfolio needs to be aiming more towards growth. And so that's why I've been investing more heavily in like things like Apple, Microsoft, Lowe's, for example, Starbucks, different dividend growth stocks I believe have major upside potential over the next few 5-10 years. Okay, now let's talk about their dividends. What we'll see right here, looking at Seeking Alpha, is they have incredible grades. Dividend consistency, A+, dividend growth, A+, dividend safety, A+. The only thing is they have a D+ on their dividend yield. And the only reason that is because it's not like a 3%, 4% high yield. It's a 1.27% dividend yield, which is not necessarily the highest, but it's still better than a lot of stocks. They have a payout ratio of 26.75% and a 5-year growth rate of 17.32% and a dividend growth record of 58 years. This stock is a dividend king. They pay out their dividends on a quarterly basis. They already announced that their next one, the ex-dividend date, is going to be January 18th of 2022. Now, let's talk about some news and different catalysts that are happening with Lowe's. Lowe's gains after comparable sales, margins top expectations. Their Q3 earnings were incredible. Their gross margin came in at 33.1% of sales versus 32.7%, which was a year ago. And it beat the consensus estimate of 32.8%. They expect to see full year of 2022 revenues of $95 billion versus $93.8 billion consensus, with a gross margin rate up even more. We want that margin to go up. Why is that? We want it to go up because it increases revenues pretty much to it, and it increases net revenues. And what does that do? Potentially increases your dividends, and it also should bring in more value to the company and the shareholders, increasing share price appreciation. But let's talk about this. Quant rating right here on Seeking Alpha, ranked in industry first out of their 7, 9 out of the 454 in their sector, and 67 out of 4,000 stocks. That's some incredible ratings. They say that these margin upgrades were through expansion by driving productivity through disciplined operational execution and cost management. Now, looking onto some more stuff. Lowe's trades higher after earnings, but Wells Fargo says an even bigger catalyst is a few weeks away. Check this out. Looking ahead, Lowe's investor event on December 15th is being circled as a potential catalyst with Q4 guidance from the company and early fiscal year, full year 2022 guidance, both seen as possibilities. What that means is that if they come out and Lowe's is like, for 2022, we actually don't expect 95 billion. Now we're expecting 98 billion revenue and margins of 34%, beating expectations. We could definitely see some upward momentum in the stock, which is what we saw last time. We can see we're up 10% this month, and people are expecting that to happen again because different things that we'll look at on the next article are driving demand for Lowe's. Wells Fargo boosted their price target on Lowe's to $280 from $260, which works out to 21 multiple of the full year 2022 earnings per share estimate. So looking at their competition, like Home Depot, what we'll see is that they have a PE trailing 12 months of 27.31, and their forward is 26.88. Now, don't get me wrong, I love Home Depot stock. This is not me bashing on them. I'm just looking at that competitive analysis, and I have both stocks in my portfolio. But with the way that Lowe has been executing recently, I think in the current term, Lowe's is a better buy, in my personal opinion. Just looking at the valuation, the catalyst that they're seeing right now, I think it's a better buy. And I know M1 Finance, like if you could say, hey, I want to buy $1,000 worth of stock today, it'll usually take your portfolio and split it up and buy it into your target percentages. However, I have not 100% decided on it, but this week, if I do, I'll create a post about it, so make sure you subscribe and stay tuned for that. But if I buy some more Low stock, what I'll do is I can literally just go into my consumer and store sector and just be like, you know what, I want to buy some more Lows. And currently it's only 20% target, so I do own more Home Depot. But what I'm thinking about doing is kind of analyzing my portfolio a little bit more and aiming more for lower yield, higher growth. So I might switch out like Ultra Group, give this like a 20% target, and actually give Lowe's a 40%, and keep Home Depot with its 40%. But that's just what I'm looking at right now in the current term. So we'll talk about this. Check this out. They currently have a diluted earnings per common share of $2.73 for the Q3 of 2021, and cash dividends was only 80 cents. So there's definitely room to grow, not only the dividend, but expand the company, which is incredible stuff that you like to see always. They have a profit margin of 9% and an operating margin of 14%. But what we can just see is that they produced way better margins than this, so maybe this information is actually invalid. Sorry about that. But they have incredible margins right now. What we'll see right here is that their quarterly earnings growth is 200% and revenue is 3%. Now, 3% is better than no percent. It's not like you're going to be getting a company. Lowe's is not some tech innovative startup, so the revenues are not going to be absolutely insane. But what we'll see is just look at the uptrending net income, earnings per share, dividend. The shares outstanding are decreasing because Lowe's is in a share buyback process. What does that mean for you? That means that every share you buy is representing more ownership within that company. EBITDA going up. Now let's look at it on an annual basis. Revenue, incredible. Debt is going up, but that's okay as long as it's not concerning and that they can't cover it, because you can see they have some good cash value right now. Earnings per share consistently going up. Shares outstanding are decreasing. Revenue, EBITDA, all uptrending. Free cash flow, net income, same story here and there. Looking on some more valuation, we already looked at the PE, but the price to sales and the EV to EBITDA, 14.37, all these numbers, you want them to be low. Compared to Home Depot, they're lower than every single one, okay? So that's some good stuff to see. The only thing that Home Depot has is that they have better revenue growth, and their margins on here are better. I actually do not know the exact 100% profit margins of these companies, but Lowe's is already producing great returns and saying that their margins are slightly increasing. Now what we'll see right here is that this says Lowe's $251.91 is trading below their intrinsic value of $451.67. So I'm not saying that, hey, Lowe's is about to make a $200 jump in their share price, but it's trading undervalued right now compared to the market, what it should be. Okay, Lowe's is good value based on its EPS earnings relative to share price for 25.81 compared to the market of 39.2 and to their consumer cyclical industry average of 79.49. So this company is very overvalued, and I love this stock right now as a potential buy in my personal opinion. What we'll see right here is just looking at technical analysis. They are they're seeing great momentum on the MACD. Incredible stuff. But on the RSI, they're 82. So the way that I plan on playing this, in my personal opinion, now I'm not saying timing the market is always 100% the best thing to do, But what I think is going to happen is, I'm not saying that I think low stock is just going to tank, but I do think that there's potential that there might be just a little pullback, okay? I think that we could see a little pullback, let the RSI cool down, come back down just for a little bit, like we did right here. The RSI got super high. We went up to 238, and we fell back down to 231. So I'm not just going to go, let's say, for example, I wanted to invest $2,000 into Lowe's. I'm not just going to go in there and put all 2,000 in at one point. I'm going to put 500 in right now, and then I might let it play a little bit, and hopefully I get some shares on a discount. You know what I'm saying? So that's the way that I'm going to be playing this. But everybody, that is what I have for you in this video, and why I love Lowe's stock as a dividend stock, dividend growth investment. I love the stock, so I'm going to be buying some shares. Thank you for making it all the way to the end of this video. So if you enjoyed it, make sure you give the video a thumbs up, and you subscribe. You turn on those post notifications for videos coming out every other day. Thank you so much. Check out M1 Finance for some free $50 by signing up and depositing $100. And also check out my portfolio if you want to go look at that. It's always great stuff to do. Thank you again for making it to the end of this video, and I will see you at the next one.